And we're here with another edition of Chart the Market. Sorry, we're a little bit behind today. Um, Before I begin, I want to welcome everybody once again, and those who watch on YouTube afterwards. Please know that all of those videos are there on YouTube at Blunhouse TA. You'll find them all there. I want to thank our friends at FEG Token and SmartDefi.com, and of course our exchange partner BYDFi. And you should hurry up and get your BYDFi account. It's a very slick trading experience. It's a beautiful interface and a really nice exchange, and I suggest you go over there and check it out. And the code is available, of course, in our Twitter post or X post, and of course it's available in the description there as well as on YouTube. So what we're going to talk about now is a little bit of fractal analysis, and that sounds complicated. It sounds scientific, but actually it's not. It could be if we wanted it to be, but we're going to keep it as meaningful and as simple as possible. And hopefully what you're looking at on your screen here is there's three charts. We have the daily NASDAQ 100, we have the 4-hour NASDAQ 100, and we have the hourly NASDAQ 100. Is all that's on these charts are the volume profiles, and we're running our script with our buy and sell signals. And the indicators are, the white we know is the 5 EMA, which changes to red when it's bearish. And then we have the T line, which is always yellow. And the reason I'm showing you this is because we talk about, and one of the struggles that traders often have is getting good entries, right? Sometimes we lose sleep about trying to find good entries. And a good entry to one person might be different to somebody else. Depends on your trading style, time frame, and a whole bunch of other things. But in its simplest form, what are you looking for? Let's say, for example, we're looking to make a trade off the daily chart, which is the window at the bottom. Perhaps we feel that the market might be getting a little bit exhausted. Maybe it's just time for a little bit of a retrace, not necessarily a capitulation, because we have no idea what comes after the next candle that we're currently working in. But we've been bullish for a long time. So if you were looking at considering starting to look for an entry on the daily, what do we do? Because we understand what fractals help us with. We drop our time frames down a little bit. And you can see the 4-hour chart that's in the middle window. And if we peel the onion back and drop the time frames a little bit more, we go to the 1 hour. And we've talked about this before, but this is where I find the script really, really valuable, is making sure or increasing the probability that you get a good entry. And here we get on the 1 hour a sell signal, right? So we know that we're looking inside each and every one of these current candles. And if we're going to catch something before it happens, we're more likely to see it start to form on a shorter time frame. A hurricane isn't born a hurricane. It starts out as something else, becomes a hurricane. So everything has a start and a finish. And we see this sell signal on this hourly chart. And if you were to take it, hoping that you get confluence on the 4-hour chart, which ultimately would give you confirmation or certainly a strong probability of perhaps catching a sell signal on the daily chart, which is ultimately the one that you thought might pull back a little bit. And that's how a runner's born. But they don't all turn out like that, right? This could simply be just a really decent 1 hour trade on a 1 hour chart, and that's okay. Nothing wrong with that at all. If you happen to get confluence on the 4 hour, blow these charts up a little bit. if you start to get confluence on the 4 hour, well, that makes you a little bit more confident that maybe you're going to get your wish on the daily. If we start to look at where price could go, because we all know that we have three choices: up, down, and sideways. That's it. It's as simple or as complicated as that, or as we make it. But what is the downside potential? What would be the draw for price on this 1 hour chart? Well, just with the volume profile on this chart, we've already broken the upper value range. And we know how much price loves the POC, the point of control on the volume profile. Then that would be a target, 24,886. And what is the point of control? It's just the most concentrated area of volume for 200 candles back, because that's how much the volume profile is set for, or at least mine. Which is, I think, standard out of the box, to be honest. You don't have to do anything to it. So there's on your 1 hour chart, there's your target. Just with almost nothing on this chart, just a volume profile in our script. Beneath the POC is this big gap, and we always know and are aware of where those gaps are and what happens when price can get into them or fall into them, up or down. It moves pretty quick. So the POC would be a natural target on the 1 hour chart, and if you were shorting this, you would want and hope for it to fall into the gap and break down to the next level. And that next level is 24, let's say 24/7 on the 1 hour chart. What's 24/7 on the 4 hour? Roughly this upper value range, 24.6 and change. Starts to become a little more clear on how this unfolds. Right? So the bottom value range, the lower value range, is essentially in the same neighborhood. So if you get that rollover on the 4 hour, it brings you right back down to 24.5 to the upper value range, because this is trading in extremely light volume. And if it doesn't catch a bid and it starts to fall into this, it makes that more likely. And what's let's just take the POC on the 4 hour is 23.4. What's 23.4 on the daily? Right back here. Whoops. Yeah, right in here, somewhere in this neighborhood. So you can see that there's these kind of concentration of candles from the past that line up with the point of control on the 4 hour. So it's probably averaging a lot of that. And that's kind of the anatomy of a breakdown and or breakout. Right? Same thing if your price was breaking out just in reverse. But this is how I'm able to find the entries that I'm hoping materialize on the daily charts. I'm simply just looking back in time, trying to see the storm forming in advance. You have no idea where it's going or what direction it's going to take. You just know it's a storm. And basically that's how this unfolds. Sometimes you catch a runner. If this was a big top and was a capitulation, then you look like a genius picking a top. But that's not the point. That's not why we're here. We're here to monetize the chart. We have a plan and we stick to our plan. We have rules and we obey the rules. Not because we're whipped and we just do what we're told. We do it because it is a structured professional approach to managing your own money and your own trades. It's not a willy-nilly free-for-all, right? You have to be serious. But when you are, it doesn't mean you can't have fun doing it. But just remember what you're looking at on all your different time frames. We live in a fractal world, right? I know it sounds like you're on another planet when I talk like this sometimes, or it feels that way. But honestly, we are. We live in a fractal world. We see it every week. What happens on one time frame, we'll see on another. Doesn't matter the asset, it just appears. But this is how we catch early entries on trades that turn out to be really, really profitable. We have a safe, profitable methodology to use within our script, and it gives us the opportunity to catch these entries that otherwise maybe we just wouldn't be paying attention to. You have to be at the right place at the right time. You have to be there. If you're not there, you're not going to be able to see what you need to see in order to monetize the chart. How do we do it? Well, we can set alerts for ourselves. We talk about that all the time. You could simply set an alert within TradingView, and they make it really easy to do that. Add alert at, and then there's a whole bunch of parameters. Just right click on your screen, and you can do that. But this is how I use this script, because I've always been have had a fractal understanding, but this allows me to capture it in a way that I could never before. Being at the right place at the right time. How do I know when something is changing? Now I know. And every once in a while you do get lucky. That entry that you see like this on a 1 hour chart materializes on the 4 hour. And then you get really lucky. The moon and the sun and the stars line up, and you get that confluence and confirmation on the daily. Then it gets really fun. And then your job becomes how to manage your trade. And you can do that exactly the same way as you got into the trade. What do we know when price is falling, for example? If we look back here to the left on the daily, as long as you're trading underneath those levels, you know you're in a bear trend. And you should be short. When you're trading on the north side, like you see here and here, you know you're in a bullish trend. Just allow the chart to guide you. Don't get freaked out by the individual candles. Focus on the trend that you see at the time. You don't want to, go through analysis paralysis or anything like that, but just let the chart guide you. Remember, you don't need a pickup truck full of tools. Just a really good toolbox. That's it. But people will say, oh, how, the market just melted all of the sudden. Nobody knew anything. Nobody could see it coming. You've heard that before, right? Nobody had a clue. Nobody had a clue. Here's the big pullback on the Dow from earlier in the year. We had a clue. We saw all this consolidation. We know what it means. We saw a price that couldn't help but trade above the T-line and the 5 EMA, all of a sudden start closing beneath it. All of a sudden start producing sell signals during this consolidation. What did you think was going to happen? All the signs are there, waiting for you to just monetize the crap out of them. But instead, we can't see the forest for the trees. We're focused on things that we don't need to be paying attention to at any given time. Everything we need to know is on the chart. The market discounts everything. All known information, and technical analysts believe, is already baked in. And look at the move down. Right? Did you get divergence between the 5 and the T line? Yeah. Was there a trade on the retrace? Yes. But then you roll over again. Just follow the chart. You don't have to have all the answers, right? You just have to do what you're told. But we do have signs, right? Right? Let's look at AMD for a moment, because it's one that's just kind of taken off, right? Gone parabolic. So people will always say to us, or me in particular, well, does this script tell you in advance of, you don't know when the market's going to make a big move up or down. I don't. But the market knows. It knows what's happening to it. What do you guys think was happening all through here? This is consolidation, just like we looked at. I'm trying to blow this up so that you can see it. So here's all this consolidation. And what do we know goes on during that period? Some people refer to it as accumulation. Maybe that's more appropriate. So we know that traders of various types and sizes were probably accumulating along this level. But then what happens is that the momentum, the scale and scope of their buy-ins starts to loses its ability to be stealth, let's say, because there was starting the money coming in was now identifiable on the chart. The fingerprints of money are all over this thing. That's what we're following, the fingerprints of money. So did I know that AMD was going to pop 30% or whatever it did? I have no, not at all. But if you just followed what the chart was telling you, because if you appreciate that the market's communicating with us through our technicals that are based on math, which we know is a language, if you don't understand that, then you're going to miss a lot of this stuff, in my opinion. Because I do believe this is a language. Mathematics is a language, and what we do is a derivative of mathematics. And what could not be disguised any longer was the inflow of money. It's money in, money out, money in, money out. And it couldn't be disguised any longer. And it showed up on our chart 10 days or so before price went parabolic. Is all you have to do is follow the chart. You don't even have to cheat an entry on the shorter time frame. You don't, if you don't want to. And here's an example of it. Little doji candle produces a buy signal. And we have no idea what happens after each candle, but you know what? That trend, albeit slight at the beginning, was holding and expanding. And then boom, price exploded. So I had no idea AMD was going to do this, but I'm sure somebody did. There's always the smart money concept, right? And that's what this picks up. We pick up the fingerprints of money. That's what we're doing. And we just have different ways to do it. You know, did we really get a shorter entry on the 4 hour in this case? Probably not. I don't think so. It doesn't matter. Because you're in plenty of time. This is the no stress stuff, right? Just do what we're told. But we're like what? Like meteorologist has no idea. You know, they can make a prediction, but the conditions can change really quick. And before you know it, your theory is blown up. Because the wind changed, right? Like, can be as simple or as complicated as that. These are the levels that we've had on our charts for months, with the hope that one day we could demonstrate that they might mean something eventually. Well, it didn't take long for the market to prove us that they were meaningful. That was the first one we laid out. Here's the second. We don't have any idea after we connect the first 2 points what price is going to do. But you can see how it gives us the opportunity to identify support and resistance moving forward. And is all that's happening on this chart right now, I'm just going to throw a volume profile up, because the volume profile shows us where the trading has and has not been. Right? Perhaps price wants to come back and test this level that it's tested before. Remember, current price revisits past. What are we waiting to see? Just like we showed on the Dow chart from February, where it had a beautiful run up and then all of a sudden started to close below the T-line and go a little bit sideways. That could be what we're looking at here. We have no idea. It's all I know is that as of today, we're trading below the T-line, and you want to make sure you hold that. But I would expect price, if it continues to fall, to test this level and so on and so on. We've already found the resistance at the upper value range. So we can't be surprised By doing this exercise early on, it saves us the element of surprise later. You look at this chart and
You
it
know,
looks somewhat structured and somewhat organized. So you don't have to look at it with fear and anxiety, right? It's just a chart. It's just one level at a time. It's just current price revisiting past, right? We don't need to get completely freaked out. And is all we have to do is start to throw up, no pun intended, or put on our chart some major moving averages to give us an example of maybe where price has been in the past. So we know that is this horse a little far away from the barn, Rico? Yeah, I think it is. So it's going to want to come back. Time and price will come together and it'll find the 20 again. Probably in one of the areas that we've already identified. Might even look cleaner on the weekly. So we talk about these equal tops and equal bottoms, how they can often be signals of little reversals, sometimes minor, sometimes major, sometimes minor. Look at the weekly. Impulse candle up, the next candle forms with an equal top and starts to fade. Is this going to be the big pullback? I don't know. We have no idea. All I know is that there's the 5 EMA and the T line, which are almost perfectly aligned with the levels that we identified on the shorter time frames before. Right? You can kind of see how this unfolds from the fractal perspective. Doesn't matter the time frame, what we see on one we'll find on another. And it just helps us track price. Right? Let's take a look at BNB because this is something that has been a rocket ship. And is starting to just obviously show a little bit of a fade today. Are you surprised when you see this chart, guys, now? What's happening? Like, is it less shocking?
Not
Probably.
at all.
Right?
It's less
Like,
shocking, but I can see it now.
yeah, like, this is an obvious area of some resistance. Accept it for what it is. This doji candle at the top of a bull run, how many times have we seen that? Produces this.
Fairy dust, right?
Right? Yeah. So when we look at this chart, okay, we're going to acknowledge the big move up. It was beautiful. But those parabolic moves, what do? They spread your levels out, right? So you can see the gap in distance. Whoa, this is going to be fun. Between the 20 and the 50 and the 200. So if you fail the T line, because ultimately this could just be a move similar to this, a retracement catches a bounce and moves higher, right? Failing the T line is problematic. We don't really want to be doing that. But if we do, time and price will come together and you'll find the 20. But that big dip is not, it's completely technically appropriate. Feels like the sky's falling, I acknowledge that. But technically it's appropriate because we failed on one level, we find the next. It's not the first time it's seen this level, so you have to be aware that it could come back and test and this time fail. And if it does, you already know what it's going to look for. Probably the 50 somewhere. And time and price will come together and you'll notice it will be at an area where there's somewhat of a bench. Like in this case, look at that bench is the shelf. Right? So price could fall. Look what it's got to go through to get to the 20, this big gap. So that'll happen quick in all likelihood if it gets down there. And if it doesn't hold, there's your support at the 50 right at the shelf. Right? This is very, very easy to learn. It's as simple or as complicated as we make it. It's just watching history repeat itself over and over and over again and being astonished each and every time that it actually unfolded the way that we thought it would unfold. Remember this from the other day? Right, that was Tuesday, this red candle. We talked about these two equal tops and what they often mean. Well, here we are, folks. Right back to the 20. We split the 50 in half, and we're sitting basically just underneath the 20. And what's all this here? Light trading, right? It's very light volume. So, which means in the event of a pullback in this case, not only are these big gaps, there's just not a lot of volume here in the first place, and the stuff that is extremely thin. So this is susceptible to a big break to the downside. If this, what happens when you have a failed breakout like this? So here's our move higher, impulse down, two equal bottoms, indicating that maybe we're going to catch a bid. You do, you reverse at the two equal tops, which are both extended above the T line and the 5 EMA, like so. These impulse candles are the ones you pay attention to. Break the 20. You're going to come back and look for the previous wave's low. And if you don't hold there, which this is all pretty thin, right? It could make for a little bit of a roller coaster. That doesn't look friendly, does it? Let's look at the weekly. Because the weekly is going to be probably your cleanest chart for trend anyways. You're basically sitting right on the T line on the weekly. So, interesting. So you broke the T line 2 weeks ago. You broke it last week. Closed above it, however. And here you are. It looks like you're going to close below it. Perhaps. It's looking heavy. It's looking kind of heavy, right? Overbought. Whoops. Overbought. This is the stochastic RSI. And it gives us a real clean indication that maybe we're a little tired. If it holds, it's just going to continue to look for the previous wave's high, just like on the way down it looks for the previous wave's low. And when they don't find support, you just look for the next level down. On the way up in this case, what are we looking for? Previous waves highs, and then we're kind of into pure price exploration all over again. But this is looking a little bit soft. At some point in time, they're going to come back and take some profits, right? Like we know that's going to happen. XRP. Pretty true. This level here is key, right? We've talked about this before. And you have the opportunity to kind of see how these charts unfold over time. At one time we had a little bit of a trend line here, right? We were just trying to show that these were where we're making lower highs, which is not good, right? The lower highs is really the key to, or the characteristic number one of a downtrend. And what's happening here, this is a structural level. So when you see a chart like this, let me just unclutter it for you a little bit. When you see a chart like this, that has a little bit of a base, picking up the bottoms of these candles from the past, we know that's a supportive level, right? This is kind of forming a little bit of a fun triangle here of some sort, and we're going to see where it ends up. But is it obvious? What do we know that's happening? We've talked about this. Here's the POC that we fail. We roll over. What are we looking for? Point of control. Price level. This is not meant to be aligned perfectly. It's not pin the tail on the donkey. We're there to get you close. And then this level here, also structural, but from a support. Right? This is support. This is support. And now resistance. We kind of talked about where we thought this was going to go. And that's kind of where it went. But nothing goes straight up or straight down. Price moves in waves and in trends. right? There's not too many charts that just go up and then, well, maybe there are, maybe there are in some spaces, but you know what I'm trying to say, right? It moves in waves. Price moves down, catches support from a place it's been before. Current price looks for past. There's those two big skis with the equal bottoms. Price bounces, and here you start to reverse. But what's notable is that it's a lower high. You pull back, you have a retracement, lower high, lower high, lower high. Just take the time to look at the chart on a daily perspective. Don't go to the 1 minute right away, right? Because you're going to miss a whole bunch of stuff. Where do you think you're vulnerable to a retracement on XRP's daily? After a candle like this, there's a potential that you could get a snapback up to these levels where you see the base of all of these candles, and or the 5 EMA and the T line, which I'm going to guess is probably right in that neighborhood. 28.7. Yeah, it is. But we know what it wants, because current price is looking for past. It's looking for a place it's been before. It rested here because of this. It rested here because of this and this. It rested here because of this, this, and this. And if we don't hold here, guys, what happens? And we break through. The message is, or the takeaway for you is that that's probably the sign of a larger breakdown, if it doesn't catch a bid, especially in this level. So all of this exuberance, how much of it's been peeled away? Let's take this as the swing low, and this is the swing high, just real quick. Well, what do we believe in? Fibs, fractals, and filters. And here's an example of our fibs bringing us back to, like, today's candle is literally resting on 0.5 retracement and sitting right at our level that we've drawn before is 618. So we're either going to get support here in this neighborhood, or that 618 becomes much more relevant. I don't know why this works, why fibs work. Nobody really does. It's just that they do. So many people believe that there's a psychological thing going on here, right? When market participants get past a certain point of a pullback, they psychologically bail. Right? If they feel strongly enough about the asset, the retrace may not get past that level. 0.382. And the takeaway is, when you see that happen, that, hey, that's more bullish sentiment than anything else. Right? These lower highs, that's a little sus. And you can't will price up. Right? You just can't. And, you know, when you see it on a daily and it doesn't make sense, believe me, I've tried, Rico. It doesn't work. I haven't been able to figure that out yet. Here's what you see, though, on the weekly chart. You're just starting to print a sell signal on the weekly. And it looks like it might have some momentum to it.
XRP has been looking shaky. And I have a lot of XRP people that pull up to the stream.
Mm-hmm.
You know, XRP people should stay true to, like, their meta. You know, unless you're trading this, it's just a thing that you accumulate and you hold on to until it does what it's supposed to do, right? Because, you know, there's moments where these guys are new. A lot of retail that's coming into the space, and small little movements on XRP, you know, I'm really worried. But, you know, the idea behind XRP has not changed or anything like that. You know, for those who are not trading XRP, we're not saying that XRP is going down because we're flooding your XRP bag. You know, we're saying that it has we got to make sure, you know, it's just having a correction. But if your plan is to accumulate XRP because you believe in the, you know, the ethos of XRP, then you should look at those lower prices as opportunities, right? Because you've been bullish on XRP since it was really difficult. Yep. But for those who are trading it, those are the ones that we're talking to that can monetize that movement to the downside and take advantage of that, because it's going to happen, you know. And like Blunt said, we can't wheel the price no matter what.
No, and And look, the point of doing this isn't to scare someone who's holding something where there's a price pullback. That's not the purpose. The purpose of why we do this and the objective is to help people read price on a chart, to help them understand the language of the market so that they don't become these unwilling, unsuspecting victims of crazy price action that washes them out. Right? We don't want that to happen. Right? We want you to have the tools to determine for yourself so that you can think for yourself, because no one will look after you better than you. The guy you hear on Twitter knows nothing about your experience or your place in life. Nothing. They may be incredibly intelligent, have a tremendous background, be very credible, but they merely have an opinion. And it may or may not be the same as yours. But ultimately, it's what we see on our charts that tells us what we need to know. I don't care about I don't give a shit about the background story. I don't want to hear about it. Blah, blah, blah. Save it for somebody else. Someone who cares. All I know is that you had 4 attempts at the 50-day moving average on a 1-hour chart and you got a sell signal. What did you think was going to happen? Oh, by the way, it was also at the point of control. I don't know. We've only been in these streams for like how long now, right? There's the signal. Do what you're told. When you get a sell signal at the point of control and the 50 on basically the first attempt, get the hell out. Buy puts, make a short, whatever. And look, the market's telling you you're okay to stay short. You're okay to stay short. Don't get freaked out by a couple green candles. No one cares. It's the trend. It's not hard.
I traded this right here.
I know you did. That's why I was showing it. But yeah, like
I know you did.
like this is kind of tough because there's not a lot of history here for this. But here you go. Like, okay, on the 4-hour, you fail the 20 and the 50 basically all at the same time, and actually kind of happens a little bit a couple candles before. You broke the 20, you found the 50. You broke the 50, right? You arc up, take out the previous wave's low. What's it looking for? Pass price. Now, if it breaks this, that's a problem. Right? Because that's on this 4-hour chart, which is kind of the only reasonable time frame we have long term. That's structural, right? And that would be a problem for a while. But this is, just do what you're told. We make this often very difficult for ourselves, right? We can be intimidated by what we hear, what we feel that we don't know, but feel we should know that other people know, and Learn to read price on a chart. Block out all that other noise. Have a macro perspective, yes, but don't get into the weeds. If you can't see the forest for the trees, just get out of the forest. Here's YM, which is the contract for the Dow. Another example, we can, if I pull the 1 hour up, you're going to get an earlier sell signal. But here you are, right at the point of control, and all this resistance and all these wicks down. What's your takeaway when you see wicks down? Sellers. They're pushing it down. All of a sudden, you get this little doji here. We talk about the dojis at the top of bull runs and bear runs, right? Up and down waves. There you get a doji at the top. Points and flats on these. Your indicators can tell you when there's changes in direction. Simple shit, but it's easy and it works. There you go. You get a point. What happens? Another dagger. Right back to the 20 and actually broke it. This one gives you a snapback, right? We don't see this as often as I would like, actually, but you do get it here, right? And again, you can see two equal bottoms. So what is this on the 4-hour chart? This is just a decent trade. You know, you're probably trading futures or something like that, obviously, and it's a decent trade. But it doesn't necessarily change trend, right? Next candle, also red. Boom, boom, boom. And the beat goes on right back to the 50. So you're trying to break through one level to move higher, and the market says no go. Right back to where it's been before. Test the previous level. No go. And then you capitulate. But where did it all happen? Way back here. Right? These signals, it's obviously not just this. There's things going on in the background with stochastic RSI and things like that to try and filter out a lot of noise for you. But when we get these signals, the ones in consolidation, obviously, there's a little more in and out of those. You have to expect that. But coming out of these kind of moves, up and down, that's when you're going to get some momentum. This 4-hour meltdown today happened overnight. Last night. So this is why we use this, because it does give us the early look into what might be coming around the corner. And then you don't have to make a trade after 50% of the moves already done. The point is to get in a real good entry. And that's what we try and do time and time and time again for you. Let's look at Solana, because it's doing something similar. Go to the daily chart. Here we are. We've been talking about this for a little while. Look where we ended up. Price is sitting right on the 50 and the upper value range of the volume profile. This gray, which indicates thin trading, and again, it's already kind of skinny, couldn't hold up any of this on the way up. Right? Any retracement, it's just pull the rug out from under it. Here you're producing a sell signal on Solana. And if you were thinking of shorting the Solana chart, because what do you notice here? Here's your high, your top, and up here is your lower high. So you're already thinking that, hey, this could melt a little bit. I'm obviously in some sort of a either transition, or that's a top, that's, obviously the impulse down, this is the retracement, and then we're going to make another move down, which would likely take out that level that you see here. But what do we see on the 4-hour? Are we going to try and sneak it? Yeah, it happens up here. Again, on the 4-hour at the point of control. Turns out to be the upper value range on the daily, but the point of control on the 4-hour. The point is their resistance levels.
This one when you get a chance.
What's that, bud?
Yeah. No, I was saying on that Solana, if you can go back to the 4-hour chart, because I was talking about something yesterday, and I love your indicator, because like when you start to trust it really good, it was like I was mentioning how even though it moved those 3 pretty green candles up, at first it wasn't even strong enough to like print a green signal at first. It was like, and I told everybody yesterday, I said I would be cautious that it could pump up that hard, and for whatever reason, it wasn't enough, even with all that pump, to print the green candle. And now we see a snapback inside there, which probably happened later on in the day or whatever. But nonetheless, you can see like that first move up did not print a buy signal. And I was like, I would be cautious on that, because it would most likely peel backwards eventually.
This, if you were looking at it as it kind of unfolded.
Yeah, like that.
A nice little hooking pattern, right? Which are always fun to trade, because you never know where they're going to end up. Quite often they can be like little springboards. But essentially what's happening here on this move is that, failing the 20 and failing the 50, this is kind of a first attempt scenario, right? Is it a decent trade if you were trading with a little bit of juice? Yeah, sure, right? But I mean, as far as the trend goes, knowing that it's a first attempt after breaking and now it's resistance, just be aware that the probability of a failure is there and it's higher than normal.
Absolutely.
Right. So the takeaway for all you guys is that when you see a first attempt, know the probability of failure is higher. It's that the first mouse gets the squeeze, the second mouse gets the cheese.
It works quite a bit.
Yeah, and this failure, because this is a lot of resistance, right, on a 4-hour chart. I don't know what this turns out to be on the daily, the 20. So when you see the resistance like that, that's considerable. First attempt especially. Be aware that that could happen. I'm not saying don't ever trade it, is all I'm saying is be aware that it might not run. Because what you're hoping for when you see this start to form is that this wave is going to take out this high, march on and make new ones. Totally logical to think about that, and it looks like the ideal setup, right? Until it's not.
Well, it's not.
Right. There you fail the 200. You don't. The 200 is what? The most basic bull bear indicator that we have. Price arcs down, takes out the previous wave's low, which it's done. We talk about this all the time, and then for you to be able to see it actually happen makes us look not crazy, right? So,
absolutely. Yeah. And I just want to let everybody know too, just real quick. This also happens on the opposite side because
yep.
You know, this thing is very fractal. So this is not being like you know, biased towards one side. Even when you look when it first broke over the 50, you know, it kind of does the same thing where like, you know, they'll do the first tap and then you can kind of go a little bit higher as well. So
yeah.
You know, especially on the 20 does more taps than the 50, but this goes both ways. You know, whichever way you're looking at it, you'll see it break either to the upside and do that first mouse kind of game, and they're healthy trades. They're honestly pretty healthy trades.
And this is actually a very nice chart because here we have the 20 and the 50 back down here, and then we have it here. So we talk about longing into resistance and why that's dangerous. And this is a real good example visually of that, right? You're just hitting your head, hitting your head, hitting your head, hitting your head, and hitting your head. These two things, when they're sitting here on top of one another on any time frame, are going to put up a fight unless there's a tremendous amount of momentum, right? And if you look at, you know, you can see how the buyers, like in your other indicators, they just weren't coming back, right? Like you couldn't get your stochastic RSI above 50, and that's where the stochastic RSI actually rolls over right at the same time you get your sell signal, right? So when you're trying to long into resistance, know that could be a little bit of a futile exercise until you're breaking through. And that's why traders talk about confirmation, right? And here's an example. So you break down, you lose the 50 and the 2 and the 20. Impulse down finds love at the 200 MA. But do you notice something? This divergence is completely holding, right? So this is kind of how your chart would unfold in real time, right? You get support, that's great, but the trend does not change. And where a lot of traders make mistakes is where? Back here. Oh, it's consolidating along the 200. Oh, it's going to be Christmas time. No. The market was telling you that wasn't going to be the case. The market was telling you you're actually going to fail the 200, dumbass. Not take it to the upside. Because you were being told. They're telling you a story. They're telling you what's going on behind the scenes. Now you've broken the 200. Now that's going to be what? Resistance. Now, you finally get a little bit of a move that shows that you have a heartbeat. You get the support you need from the 20. But here's where it gets fun. Whoops. Oh boy, what am I doing? What chart were we on anyways? XRP? No, Solana. There we go. Here's the 20 and the 50. Right? We talk about getting price action. So I'm always looking for price action off the 50. So not only am I using this fractal approach, looking at different time frames, I really am looking for price action off the 50 and or the 20, but the 50 is what I ultimately look for. In this case, you catch them both, which does happen, and you get your buy signal.
What's nice about that right there, Blunt, and I like to put my own heart on my sleeve and stuff, is trading into those moving averages, just switching that up alone goes a long way. And that's like what he was talking about, like that confirmation stuff. So now on this section right here, you see where it breaks above the moving averages, then you're waiting for that next one, right? Now waiting for that buy signal underneath these moving averages, because you're trading into these resistance. And I've gotten in trouble. I just want to be transparent. So if you can be patient, wait for this thing to be above these moving averages, wait for it to do its thing, and then you get that buy signal, now it's not trading into these things no more. So now you're almost on the other side of it, right? And that's where it's at right now. This is beautiful right there.
Yeah, we're really trying to increase the probability of things going your way. Right? So back here we saw how that kind of what resistance looks like. Trying to long into that can be fatal, but here's an example of longing when you're above it. And look what, we talk about this all the time, the divergence between the 5 EMA and the T line, in this case, just explodes, telling you, the trader, that there's momentum here. So if you were to see this little doji candle well above the 5 EMA, there's no reason to be a seller yet, because the trend is still up, right? So now you're trading above the 200, right? Closed up here, open just a touch above it, and you're still bullish. Now we know this is what? The POC, right? That thin red line. Always expect some sort of resistance, or a little bit of a fight when you get to certain levels. The POC, a major moving average, the upper or lower value range. Now you break through. All of this was telling you, right, these are just what? Red candles in an uptrend. At least at this point they are. More, you start to see what's happening here. The POC is really, kind of blocking it. Resistance, you can see all this starts to narrow out, telling you that there's a change in direction coming. Doji below the T line. Boom. Sell signal at a major moving average. Oh, we get a little love. And then the breakdown. This level here is just, nobody wants to take it up there in a meaningful way. And it's all that means is, and my mentor used to say about these kind of tests and failures, and he was an older cat, but he would say, hey, you know what? You go to the door with flowers and chocolate. She says no. You go back home, you go get some more flowers and chocolate, and you try again. And so on and so on. And then eventually you're going to show up with enough flowers and chocolate that you break through. That's how he used to talk about it. So, but we have a way of filtering all of this stuff out, right? We know we're going to get resistance at major moving averages or big benches of past price or structural areas in our charts. We know what it means when we're trading below certain levels. Try not to overcomplicate what you see. It's easy to do. Here's another thing that a few of us have traded, this BYDFi thing. Does this look like a million other charts we've looked at as far as how it behaves? Yeah. Doesn't matter what it is. Big impulse move up, all these wicks show up, so you know that prices being pushed down. Eventually you start to fade. When you have these big moves up like this, it often takes quite a bit to pull that shorter term average, the 5, down through the T line. Thus these, kind of big candles down, sitting right on the 20, which you would have to be aware on the daily chart could be a supportive level. So you have to be aware of that, because again, there's 3 choices price has: up, down, and sideways. We know how it reacts. It could simply hit this level on the daily and get some support and bounce. Maybe take out the previous wave's high. Maybe double top, I don't know. But you have to know that those are your options: up, down, and sideways. Look for the support or the failure. If it fails, it's going to look for the 50, which is right in line with the upper value range. And you guys are going to see this on all your charts. And what happens if you don't hold it? You're going to look for the next level where it might find some support. And in this case, it's the point of control, and so on and so on. Or like benches of price that you can align. You'll often find that as well. And this is all about where money has been and has not been, because it increases the probability of you knowing where it could go in the future, because it will go to places where it's got those big holes, those big gaps, and it moves through them quickly. Case in point, right? So what do we know when we look at these charts? We know upper value range. We know the thin line is the POC, lower value range, right? Are you trading above the 20, the 50, and the 200 on the 4-hour? Yeah. You break one level, and eventually you find the next. A little bit of a game of tag. You don't hold. What do you think it's looking for? The 200 and or the POC. And if it doesn't get any love, and you can see the shelf that it could sit on here, which is a meaningful one. If it doesn't get any love and doesn't get support, it breaks down and starts to fall into the gap beneath. Repeat play, repeat play. And again, that's what it looks like on the daily. So these, look at the volatility in this thing. But even with that, this is a daily chart. You have no idea what you're going to get, right? Oh, there's a buy signal. You're probably in a little bit early because I want to cheat a little bit on the 4-hour. Where are we? Here we go. Back it up. Right. So you want to, you're looking at the shorter time frame to try and scoop an entry. And there you go. And then thing just capitulates. But on the daily, if you were looking for the long, there it is. Or a 4-hour, if you're looking for the long, there it is. 8 p.m. in the evening. You get a buy signal. You have no clue it's coming. Right? You just took the buy signal. That's all you did. And all of a sudden, you look really bright. We're just doing what we're told. Like, this is a great move long until it's not. This is a great move short until it isn't. That's it. That's all. And again, you don't have to trade a million things. Have a handful of things that you want to chart and trade and get to know them really well. Because when they do make these big moves, chances are you're going to be looking at it and analyzing that chart in advance, because you're doing it on a regular basis. And you're going to be using this multi-time frame perspective so that you can see the things that we talk about, that we talked about earlier. So I didn't have any averages on this first hourly chart, but look where our breakdown came, right at the 20. That's where we got our sell signal on the hourly. And look what's happened since we've kind of been in here. It's broken down even further, finding support on the 50 MA. Look at wick, base, base. It's brilliant. right? It works. Break one level, find the next. There's your sell signal. There's the next level down. You know that's going to be a target. That would be an opportunity to take money off or add to a short, however you want to play it. You're not surprised that you're getting support at the 50 on this hourly chart, because you know it's at the first attempt of it. Yep. So it might take more than one crack to go through it, and that's totally normal. If it was to dart down through it, well, that's a whole other story. But this is a completely normal breakdown that, at 4 a.m. in the morning, you could have taken a trade. And it's starting to look as though it's turning into something interesting. There's the 4 hour. We don't have a sell signal yet, but we can't be all that far away. It may or may not show up on our daily chart, but this is the perfect example. I couldn't ask for a better situation, actually. This is the perfect example of why we've done what we've done. Why we trade the way we trade. It's not for everybody. I understand that. Everyone's got their own methodology. A lot of you will as well, and that's okay. Hopefully you'll take away a few pieces of what we do here and maybe incorporate it into your own. But ultimately, this is the perfect example. Using multiple time frames, looking and understanding that current price revisits past, knowing and understanding that first attempts, both up and down, find support or get resistance like you're seeing on the 1 hour. But eventually, if they capitulate, it will produce a sell signal on your 4 hour, giving you confluence that there's probably a move taking shape. If it shows up on your daily and becomes a runner and starts to break down, let's just look at a daily chart so that we can see what our targets would be on the way down. The 20, there's the 50, there's that level that we talked about, and then you got the 200 way down here. So you can see how this potentially can unfold. And there's really nothing special about what we're doing, right? We just have a methodology, and we just have a set of rules. And we understand how to interpret what the market is telling us through our toolbox of tools. That's it. Nothing fancy. Don't need a quantum computer or anything like that. You just have to understand how the money flows in and out. Right? We're basically looking at the fingerprints of money, and we will conduct ourselves accordingly based on what the market is telling us is happening. Ultimately, if I'm looking for an entry on a daily chart, the takeaway for you is that I'm looking backwards to see if I can find a place where the market might be unwinding to validate that long trade or short trade. I will take the 1 hour signals, and when they turn into 4 hour signals, then I'm incredibly happy. This 1 hour trade would make most people pleased. If it turns into a runner on the daily, well, that's a whole other thing.
Right. Blunt, I got a question for you. What's the upper value range on the daily chart?
It is somewhere around 21.9, give or take.
Okay, and then what is the that gap that it looks like if it breaks that point of control on the 4 hour chart, what it would be? You see, if it breaks the point of control, it'd be underneath the 200 moving average. It would trade into the gap.
If it was to fall down to the lower value range on the 4 hour, that's 23.3 roughly.
Yeah, because I'm glad that you brought this up, because I've been getting these trades lately.
Mm-hmm.
Or I'm watching it just like this. I do trade the 1 hour chart quite a bit.
Mm-hmm.
And when you get some of these to stack up, and I don't advise everybody to do this. I've done this where if the 4 hour for the 1 hour I'm getting in and I like to trade, it could just possibly be a trade.
Uh-huh.
And that's all it is. I'm cool with that. But if that 4 hour prints a red candle and I'm in that same downtrend with it, sometimes I'll add to it because I've been changing the way that I look at my winners and losers, right? I'm optimistic on my winners and I'm pessimistic on my losers. So this winner is a short that's winning for me, and then it prints another sell signal on a higher time frame. It's like maybe I might add to this winner and see if it can turn into one of those really big runners, and the daily candle gives me that print as well. But yeah, multi-time frame analysis is where it's at right here, and this little setup, everybody should consume this as much as they can because this is how you find those plays that really work out for you that
Yeah.
You're excited to make a post about.
Absolutely. And this is why I really enjoy doing these streams, because we have an opportunity, because we're in here chewing our own ears off long enough that we can actually see moves materialize on certain time frames, and just illustrating in real time that what we're talking about and what we're trying, to teach you, is incredibly valuable, and it works. There's no hocus pocus here. No one's trying to trick you. This is not magic, right? This is just years of analyzing how price moves. That's all it is. And the reason I stress that is because I think a lot of people get scared away from TA because they think it's just the other side of an already complicated matter. They don't understand how to read financial statements properly, or nor do they have the time to. And if they did, they might not even understand what they're saying. And then they look at TA and they go, "Oh my God, that's just equally as complicated without the words." Right? So, and then they feel like there's no hope. And I don't want people to feel like there's no hope, right? Like what we're talking about here, the X post this morning to promote today's stream was showing exactly this. Right now, I could have posted that, and we could be sitting here talking now, and price could have taken out these highs. I know that going in, right? But we have to trust our charts. This is going to hold until it's not, right? Maybe we find support and price bounces, but right now it looks like it's kind of fading the 50 on the 1 hour, which means we're
That's what's
more
nice about.
likely. Yeah, but
Yeah.
what's this mean, Rico? So here you've got, like, guys, you're failing the 50 on the 1 hour with the point of control in the 200 MA beneath you. That's a draw for price,
Yes,
right?
it
And
is.
and we know that price will sit on a bench of past price. Well, this is one hell of a bench of past price on this time frame. This past price in here essentially is probably that level, 28.4. Yeah, it's this level in here, right? So this is this, and this is a gap, and this is light trading. It's thin trading. So the probability of it falling into that range is probably pretty good.
What's nice about us doing this live because now you clearly see that candle breaking that 50 moving average where, we talk
Yes.
about the 50 all the time on here, where it's like,
Yep.
and that thing's pretty powerful. And if it's, showing you that downside, it's like, okay, well, what else do you want it to tell you to say, hey, I'm going down? It's not going to slap you in the face. It's like it's saying, hey, we're
Yeah.
going down.
Well, and
It's like,
actually, you know, let's just kind of look at the daily on a bigger scale on what it's looking for on this daily chart. So this is still a bullish chart. Let's not kid ourselves, right? The divergence is still there, and this could just be a red candle in a further move higher. I think what's a little different about this one is this impulse
top.
up. Yeah.
Yeah.
So what is it looking for on this pullback that feels pretty extreme today? It's looking for one of two things, the T line or the 5. There's the T line, there's the 5 EMA. In my world, that's kind of what I would target as downside risk on the daily. Right? So, just you have to know where those levels are, because although you're trading a shorter time frame, price will be attracted to these levels instinctively, and that's why, like, if you were long, you'd want to make sure that I would probably put my stop just underneath the T line, right? Because if I start to break the T line too much, I'm probably got a bigger problem.
Oh
But
yeah.
if I put it at the T line, there's a pretty good chance I'll just get stopped out because price will be attracted to that level anyways. You know what I mean? So always be aware, like on the daily, for example, where these levels are, because that'll help you on the shorter time frames, just as we kind of illustrated with this chart, right? Yeah, it doesn't look like anybody's interested right now in any of this stuff. So, yeah, it's just, look, this market's been parabolic for a long time. This could just be a slight retracement that just feels intense, or it could be the start of a larger move. But these things take more time to unfold than we think. Case in point, I'm sure you're familiar with the daily CFX chart that we've talked about before. Like 2 weeks ago, I was waiting for it to come back down to the 200 because I feel like
You
this,
sure were.
right? Like I feel
Yeah.
like this in here, this, there you go, right? This, and all this back here all aligns. But I kind of thought, once you failed to 50, it would make quick work. I didn't see this as, I thought we'd find this quicker.
I
No.
remember you saying, you're like, I remember like it was yesterday. You're like, yeah, it's looking like it wants to roll over. I
Yeah.
was like, well, roll over
Yeah.
then. Let's see.
I
And
know.
sure enough, it did.
Yeah.
It sure did. It's right
But it,
here down to the 200.
yeah, and but it just took longer than I figured.
Yeah.
And
That's the
that's
thing that some of them do take a long time to play out, but there it is right there.
absolutely. It eventually, if you're like, what did I not anticipate? I actually thought this was going to be a bigger breakdown because when price got here into this candle, I didn't think it would be able to sustain itself really at all, and it actually did. It just went sideways. Came back to the 20. This was the the additional short opportunity was in here, right? Like I always tell you guys, wait for it to come back to an area that you're like that it's gravitates to. This was the first attempt of the 20 MA, and it failed on the daily. And this, again, everything's fractal. The same thing would happen on the 4 hour, the 1 hour if we peeled the onion back. So these are things you're going to see all the time on your charts. Doesn't matter what you're trading. I know that seems unorthodox, but it's true. Take the volume profile off of oil because oil just can't get out of its own way. Here we are again. There's our 61.66 target. I'm just going to take these guys off and add our super long-term averages that are going to tell us everything we need to know about trend. Right. There's when we made the $61 prediction back here. It'll be cleaner on the weekly. And here we are. And why is this problematic? Well, when we get to the monthly chart, of course, nothing shows up except your 500 MA on the monthly. 1,000 disappears because there's not enough history. Are we still trading below the T line and the 5 EMA? Yes. We've come back to this 61, 66 levels multiple times. What's the next level down? It's this. And is it crazy batshit nuts that we go back there? No. We've been there before. Many, many times. I'm not saying we're going there for sure. All I'm saying is that in the event of a continued breakdown, current price will continue to look for past price. It's as simple or as complicated as that. What's wrong with the oil market? I don't know. Don't know. I just know that technically, when you see a doji at the top of a leg up like this after consolidation, When you see a candle print like this, we've shown about 6 examples of this today. Are you more inclined to think that the trend, when you see this, the trend continuing is higher or lower? Right? Everyone saw $100. I didn't see $100. I saw the doji at the top of a bull leg. Well, my short-term average on a long-term chart points out, which tells me there's a change in direction coming. Okay, well, what could possibly be next? Am I trading above the 20, the 50, and the 200 on the weekly? Yeah, I am, as a matter of fact. So if this is to start to melt, what are you looking for? The next level down. And if you don't hold that and you look for the next level down, you're gonna, when you start breaking levels, what do we see? Well, it's these candles that we've talked about a million times, and how in fact that 6166 level was an area of support and resistance in the past. Now, did I get out a microscope when I did that? No, it would just, I just drew a line that I could line up really quick. But what I know is that the horse is too far away from the barn, and there's the doji that opens the door for it to come home. And price is going to be drawn to past price. It does. This is a weekly. It could have been a 5-minute or a 15-minute. I don't care. And there goes price. 1,000-day moving average is how many years on a weekly chart? It's probably like 20 some odd. You're finding support from 20 years, and then you make a lower high, just like we showed on the previous chart. And whenever I can do this, I'll just draw this trend line, just like we did on Bitcoin where we can align levels. I just draw this trend line because sometimes it has something to tell me later on, right? So we've made our first lower high. Still trading above all those major moving averages and all that support. Come right back to that 1,000-day moving average on the weekly. And lo and behold, look where this wick hits. Do I know when I draw the line here that that's going to hit it to the penny? I have no clue. None. But it literally treated it, touched it and ran away, and then came right back to the 1,000. And all along it's getting support. And what's the message? You're making lower highs and you're coming back and retesting 20 years of price history. You don't want to break it. The market was already telling you that you were going to, right? Failure, break the 20, break the 50. There's your signal, and all that divergence is opening up between the T line and the 5 EMA. Now you're failing the 200. Come back to the 1,000 again, and this time you break it. All of this momentum down was telling you you could have nothing on this chart other than the T line and the 5 and figure this out. Boom. Failure again. Right, and back we go. Lower highs, lower highs. Here's another doji at the top of a move higher that happens to wick the what? The 200. First touch and runs away like a scared rabbit. And look at the divergence that opens up for you again. This is the simplest stuff for you to follow, right? Again, the job's not to front run, it's just to follow. And here we are yet again, right, in a downtrend. Can't break, can't break, can't break.
Front run, actually. I don't say please too often, but if you're thinking about front running something, just wait for your strategy. Don't even do it.
Like,
just follow the treasure map.
Yeah, like, I'm not trying to beat traders up here. It's just that I don't understand in my own small world, I guess, why people won't pay attention to some of the stuff we look at. You know, they think it's nonsensical, perhaps, I don't know. But
I think, we've been doing a good job, Glenn. I think obviously yourself better than me, but we got the Delatoshis, and it takes time. I was a bit of a hard-headed trader, and somehow I was lucky enough, blessed enough to cross paths with you, because the stuff that you give out is for any type of trader. It doesn't matter what level trader you are. You could be novice, you could be
Yeah.
expert. I thought I had my own stuff set up and it was pretty good. And I had days that was really, I was surviving since the bear market. I survived. So I was good enough to survive making a living. But this has really made it where it's not surviving and it's thriving, right?
Yeah.
So whether you're a novice and you're surviving or you're an expert and you're surviving, if you want to make it where it actually starts to thrive, this is information that anybody can apply. That's what's so good about this info. And, um, you know, those who heed this info will really start to print. It's amazing what's here. So
Yeah.
I think as more people
Well,
start to print, and the word will spread more and more.
I appreciate that, Rico. And I think I was lucky when I first started doing this. I had a couple really good teachers, and when I felt that I was hopeless, they convinced me that it wasn't, and I'm glad I listened to them. And I felt hopeless for the same reason that a lot of other people do. It's like, oh, it's too much. It's just the other side of an already complicated coin. But when you distill things down to what you need to know, and how to interpret what your chart's telling you, it actually gets easier quicker. Anybody can use a volume profile, right? But it's not just adding a volume profile to your chart that's important. It's understanding what the volume profile is telling you, because it shows you where money has been down here and where volume has been and where it hasn't been. That's important. Like, regardless of what we think of Nvidia, is all I know is that you got a weekly buy signal here and it's been nothing but up. And these 4 weeks, 1 month of price pullback couldn't change the trend. This is why this stuff's so important. Because the market was telling you that you're okay. And all we have to do is listen. These are the things that stress us out, right? Doesn't matter the time frame. We see, 4 red candles after being long, and you're like, I think I'm done, right? I think I'm done. That's enough for me. But when you understand what the market's saying, that quite often these little pullbacks that don't break and don't, where the divergence stays intact, are just simple retraces. And then what happened? Price bounced, took out the previous wave's high. Any time frame, any asset, repeat play. Now, in the event of a pullback, and again, this is a weekly chart, so this would be a lot of time involved, but you just look for levels, right? Obviously, you want to hold the T line and things like that, but if you break down, well, there's the 20, kind of lining up with the base of those candles. Price has been there before. That's a logical spot. You see this big gap here, the shelf, actually above the 50. And this is where it gets interesting, if it does in fact come back that far. We have no idea of knowing. We just have to trade what's in front of us, right? You have to trade what's in front of you, and you have to check your own kind of personal opinions aside. That you have to. Because if you don't, you'll become consumed by all the things that you don't control. Right? And there's a ton of them. Pretty much everything, right? Except what you do. What's CFX looking for? Well, on the weekly, Rico, it's found the 50. Did anybody think it was coming back to the 50 when they saw this candle? No. But here they are. So just to illustrate that all these things that you don't think can happen that are to the downside, because it seems so crazy, there's no way that price will pull back that far. Yeah, it can happen, and it does happen all the time. Right? You've heard, was it Mark Twain who said, there's a quote somewhere like, how did you lose your money? Slowly at first, then really, really, really fast. and that's trading, right? Like, it doesn't take long to get underwater, even a little bit. But boy, the rest of it can evaporate in a lightning amount of time. Right? And that's why you have to mitigate your risk, right? Make sure you have reasonable stops in place so that you can live to trade another day.
big one right there.
Yeah.
Like keeping your ability to live to trade another day
Yep.
is a big part of this. It's a big part of this.
Yeah. And look at the VIX. Like just so you know, we can't say that we can trade anything. Now it gets a little weird, the VIX, but it treats these levels of support and resistance, these major moving averages or levels of past price, no differently than anything else.
Good, actually. It's looking like it's ready.
Yeah.
I'm liking that.
Yeah.
Not looking too bad. We can get above that 200, and that's that big bear bull signal, like you say, for everybody.
Yeah.
That'd be more mark. Yeah, it's
If
looking
the
good.
if the VIX would trade over the 200 for a meaningful amount of time, we would have a problem, right? That would be indicating that there's bad stuff going on.
For sure.
Right? Do you remember this chart, guys? Like, you couldn't short this chart to save your life. Remember, layer, and now, like, look at it. It just can't get out of its own way. And when you think, I guess this is the word I was trying to say, is that just when you think price can't fall any further,
Yeah.
it finds a way to fall further. And just when it gives you a little bit of hope, it takes it right away. Right? This is why understanding what's going on a chart is really important. Your belief system or what you feel about this project can't change what price is doing on the chart. It just can't.
I've been there. I've been there where I was like, it's got to be the lowest in gold blunt. Don't go no lower than this blunt. This
What?
has to be.
Yeah. Oh, and when it does that, like the reality is that price tends to go up higher or quicker and more frequently than it does to go down, right? Like 7 out of 10 times, something like that. It moves higher.
Can you check
But
after again when you're done with Z with this one right here and stuff? Because I know it's a lot of people are paying attention to this. This is like the main looker right now. Everybody's attention is on this. So if you
yeah,
guys are listening on X, let me do this show for you, Blunt. If you guys are listening on X, like, comment, share this, follow Blunt House on this stuff. If you guys have been trading Aster, this is how you're going to learn how to print some money on Aster. Okay, so pay attention, like, comment on
yeah.
this X page, and share this stuff, man, because this is alpha right here.
This is something that seems to have some juice in it when it moves, right? Like it, I think it's trying to find its place. Here's the 1 hour. There's your 1 hour sell signal right at the 50, right at the POC. Like, and again, this is what you'd be seeing on your chart. Right? That's what you'd be seeing. You'd be seeing these 4 candles all showing you that maybe it's got to take a bit of a break. And level by level, another great example, 2 big green candles. Did they break trend? Nope. Being told to stay in your trade even here. And if these wash you out, what do we know? Right? So if this candle, just as an example, was to stop you out, this big green candle, and then the next thing you see are these 2 equal tops with the divergence between those two still open and pointing down, you can re-enter your short or add to your short even, because that's a clue, that's an indicator. This essentially would be a flush candle, right? Try and spook you out of your trade, maybe stop you out of your trade, but ultimately the market was telling you clearly that it was still in a downtrend. And here you are on the 1 hour. Yeah, could this be a reversal candle? We don't know. It could just be another one of these, right? And that's
Be another one of those.
Yeah,
Yep.
that's why we wait for the signals. Right now, is this a trade on a? Sure, like, yeah, I get it.
5 minute candle, probably yes.
Yeah,
There's a
exactly,
shortage.
exactly. But
Yeah,
I
for
mean, as
sure.
far as the major trend goes, no, right? And here you have to be careful too, because you're trying to long. You're literally trying to, catch a falling knife, right? You're pushing water uphill, literally. So these types of moves can have a lot of volatility inside them as well. So The thing that I would pay attention to is the divergence between these two levels. Stays open, then the trend is still short. You can see your stochastic RSI got really oversold. There's the momentum being shown, right? This big gap that it shows you between X and Y is telling you that there's momentum there. But it gets a little bit oversold, and maybe this is your little bit of a snapback here. This could simply just, test the 5, and then the next candle is just a big red one, and the downtrend continues. To the upside, again, up, down, and sideways. Those are our three choices. To the upside, you look for the 20, which is sitting right inside the lower volume area. So that would be a target. Is it the first attempt? No, not necessarily. So, there's a potential that it can break through. You can see that there's some past price here that it would have to hammer away at as well to break through it, but all doable. And then, of course, you look for the 50 and the 200. This is actually shaping up as a death cross on the 1 hour. I hate to use that as an example because it's not really relevant on a 1 hour chart, but there are people out there that do pay attention to it. So, right now it's bearish. It's not giving you any indication. Let's see where it's changing. Here we go. So here you're on a 15-minute chart. And here you're finding resistance to the penny at the 20. Big move down. There's your impulse. Snap back. Can't break. Perfect example again of these candles. So snap back. Takes you right to the T line. Could have stopped you out on these two candles. But look who opens next, and look at the divergence that was still pointing down. Boom. You can either add to your short there, or if you got stopped out or scared, you could re-enter. And you would know coming up to this, as you were coming out of this move on the 15-minute, what are your upside opportunities? The 20 and the 50. So now you start to get the little bit of a hook, that J hook pattern that Stephen Bigelow talks about a little bit, and it takes you right to the 20. And you get a buy signal here, right? We'll see if it holds. Just want to see where the
buy signal trading into the moving averages, though, so
that's right. You're longing into resistance at this point,
right?
So this could be an hour. This could be just an hour trade, a scalp for all intents and purposes. So there's your 5-minute with the 50 as resistance. But now you're on the north side of the 20 and the north side of the 50. You've got the upper value range, I guess, on this time frame, which is kind of also structural. You can see through here, although it's a short time frame chart. On the north side of that gap is the 200. And if this thing's got the kind of narrative around it, then, those kind of parabolic moves can happen, right? Listen, here's your buy signal down here. You stall a little bit at the 50, but still bullish. It's the move off the 50 that I'd be interested in the next candle or two to see what they do. Because, this looks like just another day going for a nice walk, and then all of a sudden you can just get a bullet, to the upside. Because you got these gappy areas, right? You have this gap here. You've got a draw for price. You're already kind of on the north side of what used to be resistance, and then you get on the north side of this, and that comes into play. But it takes time, right? It just takes time. And some of us aren't patient enough to let it unfold. But the chart will, the chart will tell us how to manage it. That's all. We just kind of let the chart walk us through it. Stick to the time frames that are a little bit longer so that you don't get too spastic. Like on the shorter time frames, it can be a little bit much. What else did we miss today? Did we miss anything? I feel like I missed some symbols today. I don't know why, but I do. Here's Tesla on the daily, right? Look at this big move north of the 20, right? Price doesn't like to get too far away from it. And when it does, you just know that eventually it's going to come back and tag it. And what we're waiting for here is it going to get support from this level? Or is it going to fall into this gap, which is part of some very thin trading with the 50 and the upper value range and all that other nice stuff, 200 and POC beneath it? We don't know. Let's look at the weekly just out of interest. Okay. So when you see this, doesn't matter the time frame, but when you see stuff like this, you instantly think it's going to double top. And sometimes that's the case, right? Right now, we have two equal or close to equal points in price. But it doesn't necessarily mean we have a double top. Actually, in order to be a real double top, it has to break the center channel that creates that M pattern. Right now, we just have these two equal tops in price, or points in price. We're still holding the 5 EMA, and you're still holding the T line. However, if you were to break it, you can see the 20 and the 50 are down here at around 340-ish. It feels like a lot, but it is what it is. This also could just be one of those situations where you have a retrace, you come back to the T line, and then you take out the previous wave's high. We have no idea what comes after the candle that we're currently looking at. What do you think people are thinking up here? So let's say you rode it all the way up here to 470 and change, 460 and change, and you didn't sell. And you saw price come all the way back to 200 bucks, or just above $200. Are you going to forget how you felt when you didn't sell 8 months before?
No way.
No, you're not. And that's the psychological part of trading and market analysis, right? Is that psychological part. And I think the longer that you're involved in markets, I think you realize that it's more relevant that you actually than you believed it was earlier. I feel that way. Our friend Carpathia that was in here is a big believer in market psychology, and for a reason, right? We're human beings, and we work off of emotion. And what we're seeing in our charts is emotional. Right? These big parabolic moves up, that's, like having a kid on Ritalin, right? Like, just, that's all emotion. It's all energy. And when the energy fades, so does price. Right? But the psychological part does come into play. If you give me a reason to doubt myself after having an opportunity to take money off like before, maybe I will.
It's going to be cool to see, Blunt, because this is a daily chart with a sell signal on Tesla right at a major moving average of 20. And it's going to be really nice to see, because if it breaks like this 50 on the 4-hour chart, we can come back to this and be like, did you guys catch that short that we were talking about on Tesla? Or were you caught up that there was a new Cybertruck coming out? It's like, you got to detach yourself with the news and stuff. It's like, just do the technical part, because sometimes it doesn't matter. And I know a lot of us has felt this, where news that's supposed to pump doesn't pump. The news that was not supposed to pump it somehow pumps the chart. And this is why it's like these things like this is important, because, no matter what Tesla got going on right now, even if there's positive stuff in the news, the chart is saying that there's, potential downtrend coming. So, this is a perfect example that, although it takes time, it's something that we'll be able to look back at and be like, hey, we talked about these tops right here and how the market was going to.
And this line, as all I'm doing is I'm just taking the wick. It kind of lines up a little bit with where the 50 is, and it picks up the bottoms of some of these other candles and tops of in here. Again, I'm just trying to connect areas that where price has been before. the 50 doesn't look unreasonable. But we know that this is all thin, light trading, and this big gap here, and all the past
200 moving averages
yeah,
right by the upper value range. So it's like if it trades up there by all that light volume, and most likely it's going to break that 50 into that gap, to say that it's going to reach the 200 moving average at the upper value range, that's not unreasonable to think that, and that's what's really nice when you start. You said something in the beginning of the stream that really hit hard for me, because when you start to appreciate this as the chart talking to you, you got to be open up to communication. And when you can
yeah,
appreciate somebody's communication, you get to understand somebody better, right? Well, the same thing goes for these charts that are trying to communicate to you in a
yeah,
form of mathematics. The more you appreciate this, you get a better understanding. You learn how to move with it a lot better.
yeah. No, absolutely right. Um, here's our going back to the NAS 100 charts again. You know, what was up here? The 50? Is that what we were looking at? Yeah.
That's the
Nevertheless,
Tesla, right?
yeah,
On your
this is
on
the
your,
NAS 100 here, and again, everyone's
it's
going to
showing the
be a
Tesla.
skeptic of what you're. There we go. We should do it. I'm just going back to the
There you go.
yeah the NAS. Sorry. Um, for those of you that are just starting out, or been in it for a limited amount of time, one of the things that I always bothered me when I first started was the people that were the naysayers, right? Because all it does is fracture your any confidence that you have in getting into this, and any um, positive thoughts get washed away real quick, right? People, like, I remember when I first started training, oh, would you learn buy low, sell high, that kind of stuff, and you can't tell just by lines and colors and dots and things where how to read the market, when in essence you can, if you understand that what you're learning is a language, right? The fingerprints of money are communicating with you. It's a real-time representation of what money's doing and not what people are saying. And that's what matters. Someone always knows more than you, and they're actively participating in markets with that knowledge. And how do we, are there times that we can see what they're doing? Yeah, there is, right? They can be stealthy for so long, but eventually we'll catch them. Here's AMD as an example. I'm actually going to take these candles off because I just want to show you quickly. Right, here's your signal. Try and blow this up. Here's your signal. And you can see that my belief is that they were squeaking in some trades here quietly, and they got away with it for a long time. But eventually, the momentum, the magnitude, the scope, the value, the volume of all of that activity got picked up in our charts. And 10 days before price pops, we get a buy signal. I don't need to know who's loading up. I don't care. All I'm doing is listening to my chart. So can our charts tell us in advance when, before we get a big move in price up or down? Yeah, they can. You and I might not know the reasons why, and those reasons why are completely irrelevant. What's really important is that you have the ability to track the money that's moving in and out of the market. That's the most important thing. It's not who you know. It's not who you talk to on the side who's a market participant and says X. It doesn't matter. Block out all of that stuff. The most simplistic thing I've learned and most difficult thing I've learned is to block out the noise. If I didn't block out the noise, I would have never been able to put my reputation on the line, if I even have one, with a chart like this. I don't listen to the people that every single freaking day are telling me that oil is ready to explode. I'm just using this as an example. How long do you think I've been hearing it? Since September of 23. Every single day, go into a space. Oil, 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 oil. And everyone's got all kinds of knowledge. All kinds of knowledge. Maybe they're in the oil business. You know, maybe they've been analyzing oil markets for decades. Smart people, right? But at the end of the day, the price on the chart is going to tell you everything you need to know. And over time, you gain the ability to add context to your chart based on what the language of the market, what the market is actually telling us. Bull leg higher, doji, gets your attention, possible reversal signal. Short-term signal points out you're trading above, as I showed before, every single level of support you could have. You're trading above it all. So is price showing a reversal signal, trading above all that support? Is it likely that it could want to come back and at least tag one of those levels? Sure. And if it doesn't hold them and it eventually fails, where's it going to go? Current price is going to look for past price. Well, there's some. Line up, line up, line up, line up. Boom, 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 boom. I believe in my charts. I believe in my methodology, and I don't give a crap what anyone else says. I don't care. Like, it's really not important to me. It's completely irrelevant. Is all I know is that for 25 years, I've watched this repeat time and time and time again. And my only regret is that I didn't take that experience sooner and build this kind of script sooner. That's my only regret. But all you guys can do this. Like, I'm so glad, Rico, that you come in, because you're a perfect example of, you already had some skill, right? You did. You already had some skill. But your ego wasn't so huge that you didn't take the time to learn, right? And what we're throwing out here is free for all of you to absorb, right? Like our friend Rico here, I'm pretty sure makes a living doing this, right? So anybody can. Literally anybody can. We're getting kind of weak here. But yeah, like, you know what? I'm glad you guys come in. Rico, I'm glad you come in and, share your experience as well. Because it's a literal, real world example of what it's like when you're trading markets, to hear you talk and other guys talk, right? So thanks for coming in.
Appreciate you, Glenn. It's really been a pleasure. And yeah, it's been life-changing, honestly. And I'm excited for what's more to come, because this is a ever learning process, and you keep getting better at this. And the fact that we can just do it live and show people what's up, and some days we get stopped out. That's part of trading, but being able to trade another day is what it's all about. So we're showing you the good, the bad, the in between. I mean, this is as raw and as uncut as it gets, and this is what people need. Now the other part is them swimming ashore and reaching for the hand so we can bring them up out of the water. But yeah, that's what we're here for, man. So I appreciate you doing these, bro.
Listen, I'm happy to do it. I love you guys, and I'm glad to share all this stuff with you. So just one last thing. This is the script that we're using on TradingView. Credit to TradingView, because they've got a really good platform that pretty much anybody can grasp quickly. This is an invite-only script, so if you search for it, you won't find it. But basically what you're getting is a volume profile that we show all the time, the ability to run 9 moving averages, from simples to exponentials to hulls to VWAP averages, the whole caboodle. We've updated the script so that your 5 EMA gives you a little bit of an early signal up or down. But everything that you see here, including obviously the signals. And if you're kind of interested in it, what I'll do is I'm going to post this link and let you guys kind of review what we're doing here and what you get. But this script literally, and Rico, I think you've had enough time to play around with it, but it literally does pay for itself in no time at all. So
Absolutely. It's going to be something, and I tell everybody, it's like, give yourself like honestly like a full 30 days of just absorbing the information because eventually, I was even one day I was thinking, I was like, man, I pray for this man Blunt. I don't need that script to go anywhere. Like, God keeps this man
so
safe. So,
so this is a funny story. So the first time, the very first no second time actually, I had a session with David Elliott, David Steele Smith Elliott. That was his name. The first one I did was in Denver, and I really struggled. And he said, I'm going to come back. I'm going to go to Toronto in about 8 months. Why don't you come take it again? So I did, and we kind of became friendly. And one day we went for lunch, and this man, like at the time, he was probably well into his 60s. God love him. But this man did nothing but smoke, eat steak, and drink red wine. And I can just remember saying to myself, I got to learn as much as I can from this guy as quickly as I can because I don't know how much longer he can do that. So, and I'm
oh,
glad
this
I
is
did.
normal than what I felt.
Glad I did.
Yeah, I was. Yeah, it was literally the other day. I was like, it was just like a really good trade, and it was like, what the indicator does, it will refine your confidence, right, and take out
Yeah.
all those times that you have those talks in your head, right, and eliminate those times that you either psych yourself out of a trade or you convince yourself to take a bad trade.
Yeah.
And after a while, all that stuff really builds on your character. You feel really confident and stuff. And I
Yeah.
remember I was sitting outside. I was actually enjoying a cigar, and I was like, man, I got to pray on this man Blunt because God forbid,
If this guy gets hit by
he's
a
in
bus or something, yeah.
he's in Italy right now. This is when you had left to go on vacation. I was like, he's out of the country right now. Like, put an angel over this man to bring him back because it was like I didn't talk to you for like 2 weeks or something. It started feeling like too long. I was like, wait a minute, let's
I
put
got
a prayer
questions.
on.
Yeah. Yeah. Well, look, I just pulled up the hourly of Bitcoin real quick. And again, you can see you got the 20, the 50, and the 200 in play, and you're starting to fail them, right? Looking for these levels that we've kind of marked before. Right? This is the lower value range. You're kind of hoping to get some support here, but just as long as you see that divergence, the downtrend is still intact. It's just, when you're looking at a daily chart, a 4-hour chart, an hourly chart, like you can do more than clean the house and walk the dog before you figure out what happens next there. So it can be a little bit of frustration. But just got to be patient. Just got to be patient.
That's it. And
So,
the script lets you be patient because what happens is when you get impatient as a human, that's why psychology in the market is crucial because you'll start to talk yourself into a trade just because you're so bored and stuff, right?
yeah,
And I've been there where I'm like, you know what? I'm gonna do some other stuff. I'll take care of some of these emails, some of this administration stuff that I'm not too fond of, and wait for my setup. And then you know what? That's when those trades are fun. And if you haven't had some fun trading, then you're probably trading against yourself a little bit more than you are trading with a good strategy, right?
yeah,
And
yeah.
the script keeps my strategy good. Where there's days where I'm like, dude, how can this not be fun? I don't even know if this is fair. It's like it's that's,
It's like cheating at the carnival. Yeah,
it
to win
really
to
is.
win the big bear. Yeah, but well, no, this is great. So I'm glad you kind of came in today. And as I don't want to sound like a broken record, but this is just repeat and practice the handful of rules that we have and understanding of the market. It is a language. It's communicating with you. Let it finish telling you what it's telling you. Let the market come to you. Right? Current price revisits past. All of these things are just about levels, as we've shown time and time again. Use the volume gaps to help kind of guide you in and out of trades on any time frame that you're trading. And I think you'll find that time in the average price, obviously in your candle, and those volume gaps do equal money, like they really do. So, and it happens quick when you find it. So, alrighty, so we'll catch up at the beginning, I guess, on Tuesday of next week. And if you guys have any questions or you want to talk to me about the script or you'd like to have, subscribe to it, just let me know and I can hook you up really quick. But in the meantime, our final close. Let's see if we get support here at the 20. If we don't, then we're probably looking for a little bit of a fade. That's where we'll leave it today. We'll come back and check all the stuff we talked about today on Tuesday. So thanks everybody for coming in. Rico, I appreciate it as always. And I think you and I are going to do another stream together on your either on the on the XPX platform.
It will be on both of our
Okay.
XPX. Yeah.
Okay, cool.
Wednesday would be the best time to do that, man. That would be a lot of fun.
Awesome. Count me in. I'll be there Wednesday, and you and I will have another go at this.